Welcome to Daily Crypto, episode 48. For those of you tracking the crypto space closely, you know it's just a constant flood of information. It's a truly electrifying world, always changing. Our mission today on the deep dive is really to distill the latest, most impactful stuff, try to cut through some of that noise you've probably already heard, and give you some genuinely useful insights.
Yeah, and the speed things shifted is, well, it's pretty remarkable, isn't it? One minute you hear strong bullish signals, the next there are warnings about a slowdown. It's definitely dynamic, sometimes even contradictory. So we'll explore those nuances with you, hopefully painting a clearer, more complete picture of where things actually stand.
Exactly. This deep dive will take you through, well, a whole range of perspectives and key facts. We're talking everything from market predictions and regulatory shifts to some frankly mind-bending new tech and even some unique human stories that are shaping digital assets. We want to make the complex stuff digestible and hopefully engaging for you so you walk away feeling properly informed. Okay, let's start by unpacking the constant buzz around Bitcoin's price and market sentiment. Feels like every day there's a new prediction, right? A fresh take. What's the current pulse?
Well, it's certainly a mixed bag, which is pretty typical for crypto, isn't it? Some recent analysis is suggesting that the Bitcoin profit taking we've seen might actually be uh, inadvertently showing us what they call a local bottom. Buyers seem to be targeting around the $117 5K mark.
Okay, a local bottom.
Yeah, which implies, potential floor, at least short term, where maybe things could consolidate a bit.
So hearing about a potential local bottom, that sounds cautiously optimistic. But then you also mentioned these on-chain metrics painting a rosy picture, while others, like that trader you mentioned, think the bull run is, quote, close to over.
How do we square those? Are they just looking at different time horizons or what?
That's a great question, and it really gets to the heart of the complexity here. It's often about the lens you're using, some of the Bitcoin on-chain metrics. They are indeed painting a very optimistic picture, suggesting the market structure is still incredibly strong, that this bull cycle has plenty more room to run. You have analysts saying pretty confidently this isn't a top predicting BTC breaks past 123K. They see conditions as ripe for more upside.
Right.
But then, yeah, you have prominent traders looking at other signals, like the one who thinks the Bitcoin bull run is likely close to
Yeah.
over. And the context they added was quite striking, pointing out that XRP recently flipped McDonald's in market cap.
Huh. What does that signify exactly? Well, it's not just a quirky factoid. For experienced traders, that kind of thing can signal market exuberance maybe reaching unsustainable levels, where assets get valued more on hype than fundamentals. It raises flags about a potential pullback, especially in the wider altcoin market. Sort of suggests maybe the easy gains for this cycle are behind us.
Yeah, those kinds of contrasts definitely make you think. But what about the longer term view? Are we still talking about Bitcoin hitting those, stratospheric levels eventually? Just maybe not tomorrow.
Exactly. When you shift to that longer perspective, someone like James Check, the lead analyst at Glassnode, offers a more grounded take. He thinks Bitcoin hitting $200 Ks this year is, quote, very improbable.
Okay.
But he's also pretty confident that in 5 years' time, it'll be well and truly past that level.
Hmm.
So it's about managing expectations, isn't it? Short-term caution, maybe, but strong long-term belief in Bitcoin's value.
That really brings up a key point for anyone trying to navigate these markets. How should traders approach this volatility, these conflicting signals? Is there a recommended strategy?
Amanda Theodoro, the CoinStash co-founder, offered some classic advice that feels really relevant right now. He suggests traders adopt an emotionless approach. Really try to stick to historical trends for success in this cycle.
Right, the old wisdom.
Pretty much. The idea is that market patterns often repeat, or at least rhyme, and letting fear or greed drive your decisions in such a volatile space, well, it can be really costly. It's about disciplined execution based on data.
Makes sense. Okay, we've talked about the market swings, which are always unpredictable, but underneath all that, there's this relentless engine of innovation. And that's where it gets really interesting, I think, for people looking beyond just the price charts. What breakthroughs are really shaking things up?
Oh, it's an incredibly exciting time on the tech front, truly. One big area is decentralized finance, DeFi. It's increasingly becoming a serious competitor to traditional finance, TradFi, especially for crypto loans. Sergej Kuns, the co-founder of 1inch, highlighted some key advantages DeFi has in that lending race. Things like a better user experience, a much wider range of collateral you can use, and often significantly optimized fees.
So DeFi is really making a strong case there against the old guard.
It certainly sounds like it.
But thinking about our listeners who might be more embedded in traditional finance, what are the sort of perceived risks or barriers with DeFi that still hold it back from, say, completely replacing TradFi lending right now?
That's a crucial point, yeah. While DeFi has these compelling plus points, the barriers often mentioned include, well, regulatory uncertainty, for one, that's a big one. Then there's smart contract, risk the potential for bugs or vulnerabilities in the code itself.
It's security.
Exactly. And also the fact that users generally need to take more personal responsibility for managing their own assets, their keys. That can be pretty daunting if you're used to banks and intermediaries holding your hand. So ensuring the robustness of these systems is a huge ongoing challenge.
Got it. And speaking of cutting edge tech, AI is just everywhere now. How is artificial intelligence integrating specifically with crypto?
AI's role is definitely expanding fast. We're seeing practical uses like Grok being used for real-time crypto trading signals, which can give traders a serious edge by crunching massive amounts of data super quickly.
Interesting.
And beyond specific applications, the investment in the underlying AI infrastructure is just staggering. Companies like OpenAI and Oracle are boosting their Stargate spend, that's their big AI infrastructure project, to over 5 gigawatts of power.
5 gigawatts? That's enormous.
It is. It means massive data centers packed with millions of specialized chips, like NVIDIA's H100s, all geared for these huge AI models. And you've got Elon Musk, XAI, talking about deploying 50 million H100 scale units in just 5 years.
Wow.
The sheer scale of ambition in AI is incredible, and it's bound to impact every digital industry, crypto included. We could see AI optimizing smart contracts, creating more complex DeFi products, maybe even powering next-gen DAOs.
The ambition is definitely striking. But, when we talk about tech this advanced, it inevitably brings up potential downsides or long-term threats. There's been some intriguing talk about quantum computing and its potential impact. What's this quantum countdown people mention? Should we be worried?
It's a fascinating and, yeah, somewhat sobering concept. The CEO of Naoris raised this idea of Bitcoin's quantum countdown. It refers to the potential threat from quantum computers, if they become powerful enough, to break the cryptography that currently secures Bitcoin and other cryptocurrencies.
Break the encryption.
Essentially, yes.
Yeah.
Specifically, the elliptic curve cryptography used for public keys. A sufficiently powerful quantum computer could theoretically figure out private keys from public keys, which would be catastrophic.
Okay, that sounds serious. Is this like an immediate danger?
No, not immediate. It's considered a long-term threat.
Yeah.
But it's absolutely critical that the industry is researching and developing post-quantum cryptography, new methods resistant to quantum attacks. Work is already underway.
Right. So even with all this new tech, foundational ideas like decentralization are still key. What's the thinking there, especially when trying to balance it with, performance and speed?
Absolutely critical. Yeah, this concept of minimum viable decentralization is gaining traction. It's about guiding development, especially for performance-focused crypto infrastructure. The idea is to have enough decentralization to secure the network, resist censorship, keep those core benefits, but without sacrificing so much performance and scalability that it hinders actual adoption. It's a really delicate balancing act, making sure things don't accidentally re-centralize as they get faster.
A delicate balance indeed. Okay, we've covered the unpredictable market and the groundbreaking tech. Now let's dig into how this all interacts with the evolving regulatory landscape and that constant need for market integrity. This feels like where a lot of the friction happens. What's going on globally?
Yeah, this is where things often get messy because regulation tends to lag behind the innovation, doesn't it? It creates this constant dance. Globally, we're seeing really diverse approaches. Take South Korea. Their Financial Supervisory Service, the FSS, is advising fund managers there to limit how much exposure their ETFs have to crypto firms like Coinbase.
Limiting exposure. Why?
They're citing caution, basically, saying the regulatory rules in the region are still evolving, still being figured out. So it's a risk management move while they work on the long-term framework.
So South Korea playing it cautious. What about Europe and the U.S.? Seems like crypto ETFs are always in the news there.
Definitely. In Europe, CoinShares just secured a French MiCA license. That's a big deal. It really solidifies their EU presence, gives them regulatory clarity under that new framework. And they've also been expanding into the U.S. since last year, looking to compete over there.
Right.
Then the U.S., you had that rather curious case with Bitwise's ETF conversion. The SEC approved it and then almost immediately paused it.
Yeah, what was that about?
Well, analysts are speculating. Could be politics, Could be that some specific crypto rules are still missing or unclear. It just highlights how unpredictable U.S. crypto regulation can be right now.
Feels that way sometimes.
And looking forward, 21 Shares has put in a preliminary application for an ETF tracking Ondo Finance's token that's a DeFi platform. So continued interest in bringing more crypto assets into those traditional wrappers. Meanwhile, the spot Ether ETFs, they've seen really significant daily inflows lately. There was a 13-day streak that pushed the total over $4 billion, bringing all-time inflows to around $8.3 billion.
$8.3 billion, wow.
Yeah, it really points to rising institutional demand for Ethereum exposure through these regulated products.
So you've got caution in Korea, Mika providing clarity in Europe, SEC flip-flops, and big ETF inflows in the U.S. It really underscores that global challenge, doesn't it? Trying to balance innovation with protection.
Absolutely. It's a complex dance, no single playbook, kind of a patchwork, evolving framework worldwide.
Okay, and what about central bank digital currencies, CBDCs? Are governments still full steam ahead on digital dollars or pounds, or are we seeing shifts there too?
That's actually another area with significant developments. The Bank of England, for example, is reportedly thinking about abandoning its digital pound plans entirely.
Really? Abandoning them?
Seems so. Governor Andrew Bailey apparently favors letting private payment innovations flourish, rather than the state launching its own central bank digital currency. It's a pretty notable pivot. Suggests some central banks might see more value in fostering private sector speed and dynamism rather than building their own.
That is a huge shift in thinking. Okay, finally on the integrity front, scams, cybercrime. Unfortunately, still a big problem in crypto. What's being done to combat that?
It's a critical fight, and authorities are definitely stepping up, but yeah, the problems persist. Unfortunately, we still see major scams, like that really concerning case in Colorado, a $3.4 million crypto scam involving a pastor and his wife. They shilled something called INDX coin, claiming God told him to, and at least 300 investors lost money. Just highlights the need for vigilance against people exploiting trust.
Awful. Are authorities getting any better at clawing money back?
They're trying. In Seattle, for instance, U.S. federal prosecutors are working to seize $7.1 million in crypto linked to an oil and gas investment scam. The goal is to distribute those funds back to the victims.
That's good to hear.
And at a policy level, the U.K. is proposing a ban preventing its public sector like the NHS, local councils, from paying ransomware demands.
Ah, hitting the business model.
Exactly. Yeah. The aim is to smash the cyber criminal business model by taking away the financial incentive for those attacks. And within the crypto industry itself, you see proactive steps too, like CoinDCX announcing a white hat recovery bounty after they suffered a $44 million hack, incentivizing ethical hackers to help get stolen funds back.
Okay, so a multi-pronged approach there. We've hit the complex global regulations, the fight against scams. But, beyond the serious headlines and policy debates, the crypto world is also just full of these incredibly unique, sometimes frankly bizarre human stories and cultural moments. What's caught your eye recently on that front?
These are always the most fascinating bits, aren't they? One really intriguing story was around the NFT market. Remember when there was news Ozzy Osbourne had died? Which thankfully turned out to be a hoax.
Oh, yeah, I remember that.
Well, his CryptoBats NFT saw this incredible 400% surge in price right after that news broke.
No way. Just based on a hoax.
Apparently so. Now, the volumes were modest compared to, say, 2022 levels, but that spike is being watched. Could it signal some life returning to the NFT market? It just shows how cultural events, even rumors, can have these weird, unexpected impacts on digital asset prices.
That is a unique market dynamic for sure. What other, maybe success stories highlight the extreme ends of that risk-reward spectrum?
Well, there's this pretty remarkable story of a trader who apparently turned just $6,800 into $1.5 million.
$6,000 to $1.5 million? How on earth?
By deploying a sophisticated bot on a perpetuals exchange, those crypto futures contracts that don't expire, the bot was apparently leveraging maker rebates, meaning it got paid for providing liquidity and used extreme microstructure precision.
Microstructure precision.
Yeah, basically meaning the bot was trading at an incredibly granular level, placing orders strategically to capture tiny, tiny price inefficiencies, likely faster than human traders could react. It really highlights the potential for these high-risk, high-reward strategies if you have exceptional technical skill and discipline, but obviously extremely risky.
Incredible. Such a small starting amount, too. And finally, any interesting connections cropping up between public figures and crypto?
Yeah, there's been some chatter about a figure being dubbed Trump's Bitcoin mentor. Apparently, this person has seen their own wealth absolutely explode by implementing Bitcoin treasury strategies, basically holding Bitcoin on the balance sheet. It just underscores how high-profile individuals adopting or promoting certain crypto strategies can significantly impact their own fortunes and also bring more mainstream attention, for better or worse.
Wow, what a journey through the digital asset space today. We have covered a lot. From those ever-shifting sands of Bitcoin's market outlook, the relentless pace of innovation in tech like DeFi and AI, then the complex, evolving global regulatory picture, and even some truly wild stories showing that human element of risk and reward. These insights hopefully really help you, the listener, make better sense of this fast-moving, often bewildering world.
It is compelling, isn't it, to see how all these threads, market speculation, tech breakthroughs, regulation, these human stories are constantly weaving together and shaping what comes next for digital assets. Despite all the volatility and the challenges we talked about, the crypto world just keeps evolving at this incredible pace, and the implications, they ripple out far beyond just crypto into finance, technology, maybe even our daily lives eventually.
It truly does. So as we wrap up, here's maybe a final thought for you to ponder. Given this dizzying pace of tech advancement we discussed, the inherent market speculation, that ongoing dance with regulation, how might the core decentralized principles of crypto ultimately redefine our traditional ideas about value, about ownership, maybe even about trust itself in this increasingly digital age? Beyond just the price charts, what's the long-term societal impact this whole revolution might actually have? Something to think about.